Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. Happy Friday to you and your family. Hey, you made it. Good news. We got the weekend on the horizon, and obviously you can do whatever the heck you want. Really just depends on your lifestyle anyways. Regardless, you might actually have a weekend every single day, and that's fantastic as well. Either way you look at it, going to take a look here at Bitcoin, see what's going on, of course, help understand best practice and big picture. If you are new to the channel, I hope you can learn something here today. My goal is to help you become a better trader, period. And I have a trading academy community and signal group specifically designed with that purpose, so feel free to check that out. CryptoCache.tech is a site, link in the description below. I also provide discounts essentially for military as well as third world countries. So feel free to contact me direct. And one last thing too, make sure you use the contact information in the description below. I will never contact you or directly message you. Okay, I will respond and reply, of course, as I greatly appreciate all of your support, but I will never initiate a conversation, so just be mindful of that. So taking a look here at Bitcoin, pretty standard stuff, kind of expecting this to happen. Friday being a red day. Now, granted, the day hasn't closed, of course, we know this yet, but at the same accord, it's still one of those just very common, rinse and repeat type of situations. In other words, just to give you perspective, this was a Friday, this was a Monday, this is a Friday. So there's a common theme there. And again, no guarantees that it's always going to happen that way, but you can almost count on it right now, just based on the fact that whatever profits were had throughout the week are getting taken now. And of course, just kind of natural nature of things. And what's interesting here too, if I'm not mistaken, NASDAQ is actually up today, gapped up, which is interesting. And the traditional markets are doing well. So for Bitcoin to be suffering here, it's unfortunate. Obviously, they're not codependent on each other entirely, but it's an interesting situation when the regular market's doing well. You do expect a lot of times, more so recently, that Bitcoin will recover and do all right. So I would just say, take that with a grain of salt. You can never guarantee a direction that the price will go based on the traditional markets. It seems to be kind of a wild card in that case. But once again, in most cases, though, when the traditional market goes up, we should experience an increase on Bitcoin. This basically just tells us that there's some pretty strong resistance levels and some pretty strong things holding the price action down regardless of what's going on there. So let's go ahead and take a look at those. Once again, this is kind of just a reiteration of the fact that we are underneath the 20-day set moving average and above the 50. Notoriously, we spend at least 6 months underneath the 20-day SMA, and this could essentially be the very first month. So if you think about this being month number 1, we could very well see 5 more months underneath that moving average. So once again, hypothetically, we're looking at maybe about 2 or 3 months of continuation of the downside, and then a likely recovery to bounce off the 50-day SMA on the monthly. Okay, and that's trending right around 21,000 right now. Okay, very similar situation here, only with the 200. The 200 is trending right about 22,000. So I do feel like 22,000, or just a range of 20 to 24 is very realistic for Bitcoin. It may not happen this week or this month, but it is likely to occur in the next couple of months. Okay. Again, just based on history repeating itself, but you do have to understand we are 9 weekly candles into this red trend. So it's been, hasn't been a very awesome situation for a lot of people. Hit 48,000 and just got rejected, and it's pretty much gone down ever since. So a lot of longs are getting wrecked. I recommend you take longs with extreme caution right now, and make sure that you have the appropriate risk tolerance and take small position sizes. It's really the bottom line there. But again, shorts are effectively in style right now, and I'm not talking about the ones you wear. If you were to short a trade, you can essentially maximize your benefit, okay? At least in most cases. That being said, taking a look here at the daily. Let's go ahead and move on here. Let's go ahead and scrunch this in here as well. And we can kind of see this channel that we're in here, okay? So it's wicked up a couple of times, maybe 3 or 4 times, and it's wicked down once or twice. But the bottom line is 28,700, which is almost exactly where the price action's at right now. It's testing that level once more, is essentially the key level support. We lose that, there's a strong chance we're going to see somewhere in the range of 26,700 as the next potential support level. Again, that's just based on a previous support when the price wicked all the way down to 26.7. And that was May 12th, I believe. Ever since then, we've been stuck in this range, and the upwards part of this range is right here at 30,500. So between 28,700 and 30,500, we are essentially just seeing the price action continue to stay in that range. And it's okay, and it's cool to have range bound activity, but with it, when it goes on for this long and it had started from up here, that tells us that there's a strong chance we're going to see another continuation of the downside. Again, potential rallies can occur. There's nothing wrong with that. In fact, I would totally welcome it, but it's probably best to anticipate the price losing the support at 28.7 and working its way down lower. Okay. So again, that's just generally what we're looking at there. All right. So that being said, that's kind of roughly where we're at here. And what we can do too is kind of look at some of these other moving averages and kind of identify. Honestly, on the daily right now, we've been kind of stuck, again, the sideways action where the RSI is increasing and the price is effectively decreasing. That's a hidden bearish divergence. It's still essentially coming to fruition here when you think about it, because price is breaking down. Okay, it's slowly breaking itself down, and the RSI was, up until this last couple of days, increasing steadily. It really just tells us that there's going to be a continuation lower, especially once again, since we have this type of flag pattern or pennant pattern coming down, the likelihood of it continuing lower is greater. Okay, so that's generally what we're looking at here. That's essentially the concept for Bitcoin. We have this bearish divergence, and we need to acknowledge that. Moving forward though, here with the 4 hour, just kind of get perspective, very similar situation, of course, but we can see it's maybe not as definitive. You may not be able to see it tremendously well, but there are lower highs essentially being created, and the lower lows are also doing so as well. So, again, when you see that kind of formation, and I picked up on this a little while ago, at least on the daily, I think it might have been yesterday or the day before. If we cannot break above 30,500, or in this case here, get back up over 30,200, which did not happen on this little push, then the continuation of the downside is extremely great. Okay. Now, we've been maximizing our benefit with some shorts lately. We took a really good short with, I think it was CHR, and then also Ethereum. And I can tell you that it's definitely, once again, a market that you can expect the price action to continue lower. We're finally, or well, I wouldn't say finally, but generally speaking, we're at this point where we're actually getting rejected by the 20-day SMA, where it's effectively been a support and resistance level for a while now. That doesn't matter too much, honestly. I don't bank my decisions on those moving averages on the 4 hour time frame, but I can tell you that the fact that we're coming up here now and starting to get rejected by that does kind of tell us that there's a great chance we shouldn't expect the price to come up in the immediate future. Now, we might see a weekend rally. There's a small potential of that. Just know if it does go green this weekend, please exercise caution on Monday and expect the unexpected, because this does exactly what you don't want it to do, and it'll probably go down again on Monday if we get an increase this weekend. The likelihood of a rally this weekend is pretty low, though, considering the state of the market and the way things are going, how we've been trending towards this. I don't think we're going to see a strong weekend either, especially if we cannot close green here today. We'll look at the MACD. We can obviously see a very strong divergence, and there's a divergence in the force. May the force be with you, but I can tell you, no, this is not looking good. This is disadvantageous, kind of just telling us that there's no potential turnaround in the immediate future. A lot of folks will think, well, okay, well, if it's down this low, then it can't go any lower, right? That's not true at all. They can continue concurrently for a long time, and when that happens, it essentially just tells us that the bears are in control. You can see this oscillator working its way down, and effectively telling us that, hey, the bulls are really nowhere to be seen at this point. And of course, logic would kind of give you the impression that the bulls are going to reverse the price action because it is so low. That's not exactly the way that it works, because we're not at an exhaustive state. If we take a look here at our TD sequential, we're at a 3. We got a reset here recently with that large candle wick down and the little recovery from there. So with us being at a 3 on a 4 hour, that tells us we could have somewhere in a range of 7 times 4 hours, 28 hours if I'm not mistaken. 28 hours of continuation of the downside is potential. Okay, again, now there's no guarantees on that. We don't always hit 9s. We'll get 8s and we'll hit a reset, or we got a 7 and a reset. But generally speaking, this downtrend is technically just starting, based on the fact that it was able to consolidate in this area and wick back up, or recover from that wick down rather. So again, not fantastic stuff here. There's literally nothing I see here that tells us we're going to see a reversal soon. Okay, we just got this typical little pattern to the downside, and the price action is going to probably break to the downside because we're testing this level multiple times, And it's essentially just a matter of the bulls eventually giving up, and then the bears taking complete control. Because you got to kind of think about it this way: it's always a fight or a battle between bulls and bears. And keep in mind, industry leaders, etc., they shift between bullish and bearish qualities all the time. They have different, sentiment. When we keep testing a support level like this, the bears keep trying to push, keep pushing the wall, keep nudging, and then eventually the bulls get kind of tired of that, and they can't contribute any further, or they don't want to, because it's just so much selling pressure. I know it's a terrible analogy, but generally speaking, that's kind of the concept. It's always a constant battle between the two, and it's important to recognize who's winning. It's pretty obvious right now the bulls are not winning. Okay, so just come to terms with that. Looking at T sequential here on the 1 hour, let's see if we got anything we can just disseminate. We can see, okay, we hit a 9 here recently, got a little reset, came back up to a 2, got rejected off this tentative trend line, and essentially still making lower highs. So again, if you can see this here, pretty stark reality. Lower highs and lower lows. Okay, so until that changes, there's no reason to expect the price to come back up. In other words, we need this next high, if there were to be one, to break this little level here right around 29,600 and close above to effectively give us a consideration of a higher low, or correction, a higher high. Then that should be followed by higher lows, etc. But again, we're not even close there. So in this complete analysis, I've found 0 items so far that is essentially telling us that we are good to go. All right. So again, something that you need to understand is just a general sense here that Bitcoin is on its way down. We could very well lose the support level of 28,700. And we could see some lower price points. So let's talk about that just really quick, and we'll call it a day here. What would that look like if we were to break down? Now, this support level here, once again, is 26,700. That's roughly where the price action came all the way down to. So we need to understand that in that sense, if the price were to lose, we have roughly a $2,000 gap in between here. Okay. Now, if we take a look at the volume, we can understand, of course, there's a tremendous amount of volume here so far. Right close to the current price point. In fact, there's more volume at 29,000 than there is 30,000, which is okay. That's good. It's helpful to have a foundation of volume. But when you lose that foundation, it becomes null and void. And what we want to do is look at larger time frames here too. And you can kind of see this pretty large shelf here. Okay. If we were to lose that, there's a great chance we could see this gap getting filled somewhere in the range of 24 to 27,000. Okay. So again, just looking at everything here so far, we really cannot, I think you'd be naive to think that the price is going to recover and bounce back. That being said, how you invest effectively in this current market is to add to your position when the price comes down, set some dollar cost average targets to maybe at 27,000. I was happy to get filled at 27,000 when it wicked down here previously. I'll be happy to do it again. So again, I still feel like that's a good value for Bitcoin. And once again, there's no guarantees that we're going to see 21, 22, or even 24,000. But I think the likelihood is still very much present, and we want to prepare for that. So set some dollar cost average targets. In other words, what you do is you get on your exchange, you set limit orders at a specific dollar amount or percentage of what you have available, and you'd essentially put that as at a specific price point. So to me, 27,000 would be logical. That's the next immediate support that we could see retested. If you want to get filled in between, maybe somewhere in the 28,000 range, because the price wicked down to 28 recently here as well. So just some theories and some thoughts there on what you could and should do. Again, it's up to your risk tolerance. Whatever you do, I talk about this in my trading academy all the time, and how it's important to work within your own risk tolerance and your personality. If you feel uncomfortable with the losses that you've experienced here so far, perhaps it's not for you, or perhaps you need to recalibrate and start using smaller amounts. Okay, but when it comes to dollar cost averaging, never use everything you have available. Perhaps at like a 24,000, for example, you could maybe have a very large buy order. That's perfectly fine, because again, the likelihood of that happening is lowish, but it's also better to get filled at a lower price point, obviously. So if you're going to have some egregious type of investments, have them at lower price points, of course, and then have like your lighter percentages, maybe 5 to 10% at a time as it comes down. All right, different little theories and thought processes, but just generally speaking, be careful and cautious. We're seeing a red Friday here today, unless we can close, somewhere in the range of just say maybe a doji at 29,200. We're not going to really have much of a leg to stand on. So if this candlestick is red today, we can expect red throughout the weekend. That's essentially what it's telling us. So I would just anticipate a not so favorable weekend, depending on which position you're taking. Long positions, be very careful, be very cautious. There's no guarantees, okay? So that being said, that's kind of where we're at here. I hope that you did learn something, of course. I know I kind of rambled on quite a lot with different examples, but I hope that you can, once again, take something from this, because my whole point is to make sure that we all survive this market. There's really no point in getting wrecked any further than most of us already have, right? And just so you know, you're not alone. I've had plenty of losses myself as well. Thankfully, the gains are larger, and I'm picking the correct battles, you could say, because again, we're taking positions to the downside and maximizing that benefit. But you just need to be cautious with some long positions. Don't expect to buy low and sell high in this market right now. I think we're a little ways away from that. All right, thanks again for joining me here. Again, you want to become a better trader, CryptoCache.tech is a site, link in the description below. Look forward to working with you. Hope you have a great rest of your day. Thank you so much.